welcome. So I think we're going to go ahead and launch. First of all, for those of you that are out there listening, I want to say thank you. Thank you for giving us some time today to be a part of this. I'm Brad Fain with the Fain Signature Group, and we've been holding weekly Zoom meetings with our tenants to just share information, share ideas, share stories about this new, very unprecedented market that we find ourselves in today. And the one thing we do know is that tomorrow it'll be different than it is today. And so we felt as a company and as an organization that it was best to collaborate with those around us to try to prepare for tomorrow, to try to learn from what we can as a community today and share those ideas. And we found that by creating this community to come to a place to share information where we all are at least able to understand better and maybe be into action to better ourselves and our opportunities for tomorrow. In the midst of all this, the government has done a lot of things that are completely out of our control, and we recognize that. They shut down the market literally overnight. And for those businesses they didn't shut down, they still greatly impacted them, and they may as well be shut down in some cases. But in that, the government offered relief. They offered relief through the PPP program under the CARES Act and also the Small Business Administration, the emergency relief money. Today's topic is focused on the PPP, and even though it's not completely understood and it's going really fast, it has been successful for some businesses. And so we thought today we wanted to share that with the community, and we thought it was such good information to get out there and share from the local businesses that have been helping businesses with this and have been involved, that we wanted to share it to as many people who wanted to join. So we expanded it to the whole marketplace, if you will, Prescott Valley, Chino Valley, and the whole market up here. And why did we want to do this? Well, as a company, Fain Signature Group, we believe in community. We believe the success of the community is dependent upon everybody in the community being successful and having the ability to be success. That one neighbor's success can lead to another neighbor's success. And so in that, we felt this information was valuable to share to as many who wanted to listen. So that's why we've done it. We've also done it because we've gone through the process. We've gone through the process helping our tenants and working with our tenants. And we've also personally, as a company, gone through the process. And we worked with Foothills Bank and had a wonderful experience there. And they've been very instrumental in helping us with this. And so we thought, well, why don't we pull together a group that's gone through the process, had some success, and share those stories so that we can share knowledge and experiences that might help others find their way through this unprecedented situation that we're all in and look for tomorrow to be successful. So with that, I want to introduce our panel. We have Ryan Gleanan from Foothills Bank. He's going to be here to speak to us about what their bank has been doing and the success that they've been having and how they've been helping others in the community, as well as he's going to try to share the best he can, because it changes every day and probably multiple times a day, what the future of this program looks like and if there'll be another program or not. And there's a little uncertainty out there, but Ryan will speak to that. Then we're going to hear from Jim Cabral. He's the owner of Gabby's Grill here in Prescott Valley, as well as other Gabby's restaurants throughout the region. Jim went through a process with another bank, but he got his money, and now he's going to speak a little bit to what do you do when you get the money? Because everybody wants the money and they want debt forgiveness, and there's some things that aren't really spoken to about how to accomplish both of those. And so Jim's going to just share his experience and his ideas around how to accomplish that so he can attain the goal. And then Oren, he's the CFO of Fain Signature Group, and he led us through the process here, and he's going to speak a little bit to that experience and how we approached it. So with that, it's really about these guys and their experience and their knowledge. I'd like to turn it over to Ryan at Foothills Bank.
Thanks, Brad. And thanks, everyone. I appreciate the opportunity to be here and share kind of what we've experienced at Foothills Bank. So as Brad said, yeah, we are all learning a lot every day in this program. It was rolled out fast and furious, and we've kind of all done our best to keep up and to get this out into the community as fast as we possibly can. Just to give kind of a little bit of a background on it, the program was rolled out. The first date that we could begin accepting applications was April 3rd. On the evening of April 2nd is actually when they released what they called the interim final rule for the first stage of applications. And that night of the second, they actually updated their application form. Again, they had already released a form and then released another form in the middle of the night. So, all the banks have been scrambling just to try to get their mind wrapped around this and get to a point where they felt comfortable being able to accept applications and process these. Our bank saw it coming. We jumped on it really quickly. We started accepting applications that day, and our processors and our loan analysts and loan officers have been working day and night, weekends, everything. The only day they've had off since has been Easter. To get these processed. So want to give you a little bit of just some numbers on what we've processed, as well as some numbers of what we know on a national and state level as well. So you kind of see that these funds are making it out into the community through our bank and others. So on Monday, the SBA released a report that outlined state by state and in total how much of these funds have actually been approved. Now, approved doesn't necessarily mean funded. It just means they've been entered into the SBA e-trans system, and the funds at that point are basically set aside until they can be dispersed. As of Monday, they had dispersed, or they had approved $248 billion of the $349 billion that's allocated to this program right now. So you can kind of do the math on that with how long it took a lot of the banks to get up and running and start getting these loans approved. A lot of people are saying, and our bank is projecting, that we think that they may run out of funds come tomorrow or Friday. At any rate, I'm sure by Monday, these funds are going to be gone in the current round of what's allocated. There are talks in Congress to increase the funding by another 200 to 250, 200 to 250 billion dollars, and that would be great. I mean, that would get a lot more money into the communities. It literally takes, as the saying goes, an act of Congress for that to happen, and then the president would also have to agree to it. So, they're kind of they're negotiating back and forth right now. I'm not sure what the exact timing will be for them to get that done. But do want you to know that there is a possibility that there could be more funds coming on that front. So as we go through this and we kind of talk about the process, if you've not got an application in somewhere yet, it's possible that by the time you do get an application in for this round and they get it through their process, that it could be too late for this round of funding. But I still think it's a good exercise to go through, get the documents in order, start talking to your bank, understand what you're going to need in case this opens up again. You can be one of the first ones in line at that point for the next round. So 248 billion was approved as of Monday. That was over 1 million loans. In Arizona, it was $3.5 billion and just under 11,000 loans. Foothills, ourselves, this is as of Monday. I have some more current numbers I can share with you, but I wanted to do some comparisons as of Monday. We had approved 84 million in loans, and which is 563 notes. And so that kind of puts our Arizona, share of these notes, if you will, at 5.1% based on the total note count and 2.4% based on total dollars. And to put that into some sort of perspective, our bank has a market share, a deposit market share in the state of 0.65%. So we are a very small bank in the grand scheme of, money center banks in the state. 0.65% market share, and yet we've funded over 5% of the notes in the state. So that works out to roughly 8 times our market share is what we've been able to get approved through this system. As of last night, a little bit more updated numbers. We had 773 loans internally approved. 625 of those have made it all the way through the SBA E-Trans system. There is a little bit of it just takes labor. Once we approve it on our side, then we have to go in and input it into the SBA system. And that system has been freezing. It's been overloaded, as you can imagine. We've had people going in at odd hours of the night to try to get it done when the system demands are less. And so there's a little bit of a lag there, but 773 approved, 625 input into the E-Trans system, and then we have another 145 applications in the queue. And then funded, we've actually funded 183 loans for $32 million. The total approved right now is 102 million in our bank. So we're very proud of that. We have people in all areas of the bank doing loan processing right now. We're calling them our honorary processors. They're basically new accounts people are doing it. We've hired back people who recently left to go pursue other ventures. Some of them aren't working right now. We've hired them back to come do loan processing for us. It is literally all hands on deck, and I think that most of our processors and analysts are working easy, 70, 80-hour weeks to try to get these through as fast as possible. This last Friday, they opened it up for applications for self-employed and contract workers. So like your typical Schedule C type income earners. And we're starting to get some applications in on that front. Again, the guidance has been a little bit delayed, and so we're kind of learning that process as it goes. In short, it's a 2.5. The eligibility for the amount you can borrow is 2.5 times what your average monthly payroll is, and as long as you spend up to 75%, or as long as you spend at least 75% of that on payroll, and the remaining 25% on either utilities or loan interest expense for the business, then the loan can be fully forgiven. That's after 8 weeks. You have to spend that amount of money in 8 weeks in order to reapply for the forgiveness portion. And this is kind of one of those things we'll all learn together, because the official guidance on the forgiveness piece of this hasn't come out yet. So we're just kind of going with what we know now, giving the best advice and guidance that we can, and we know that in 8 weeks, we're going to have another, probably close to 1,000 loans at that point in time that we need to start working through this forgiveness process on. So if it's forgiven, if you're eligible, if you use the proceeds for the right purposes, the loan is forgiven. That's all loan principal and interest. So you literally pay nothing for this loan. If a portion isn't forgiven, or if all of it isn't forgiven, then at that point it becomes a 2-year interest-only note at a 1% interest rate. So still really great terms. I think most people are expecting that they'll have this forgiven, and I would say that 98% of the people that are applying for this are expecting forgiveness on it and are doing the right things to make sure that they will qualify for that forgiveness in the end. Trying to think of what else I can share on that front. The feedback that we've gotten from the community has just been incredible. I mean, people are so appreciative of getting this money, and they're able to pay their employees, and that's really what this is all about. It's about keeping people employed who don't have a choice in the matter. Like Brad said, I mean, the government sent most of these workers home, and so we take a lot of pride in that. We look at it as our civic duty to be involved in the communities that we're located in, and so we really love and take pride in the ability to be able to deploy funds to help the community. During the last big recession, the banks were the bad guys, and it does feel good for a change this time to kind of be on the on the good guy side of the equation. So we're happy to help the community. We hope that this is a lifeline, and that people are able to make use of these funds, and ultimately we can all come out the other side of this together.
Hey, Ryan, really quickly, there was a question that came in. Keith asked a question that he applied for the PPP through Fundera. through Groupon while he was waiting for another institution to come online. Now that the institution he wants is online, can he apply through them? So the question is, can you apply through different institutions?
You would need to only apply through one institution, but you can withdraw your application. So you should be able to contact Fundera and have them, withdraw the application so that he can apply with, looks like 1AZ. The risk in that is you don't really know where you are in the process with Fundera, and if you're right there at the end, you kind of hate to start that process all over again. So, definitely be worth your while if there's any way to get on the phone with a real person at Fundera and talk through that with them. That's really where the value in having a contact at the bank is. So you can talk through those sorts of things. We've had similar questions come. Someone the other day was midway through the process with Bank of America, and they wanted to switch to us. And we kind of have the same conversation. It's like, well, we'll do our best to get you through as fast as we can. Right now, we're running about 2 to 3 days to get, from a complete application to get you into that SBA E-Tran system. Don't know how long Bank of America is running. If you're within 2 to 3 days there, maybe it makes more sense for you just to stick with the path you're on.
Great. Thanks, Ryan.
Yeah.
We'll see if any more questions come on. You can track that on your screen. Right now, we'll go to Jim, owner of Gabby's, and we're going to hear about his experience going through the process and really his thinking now that he has the funds and how to manage it.
Thanks, Brad. Welcome, everybody. Yeah, so our experience was real good. We used National Bank of Arizona. It went fairly well. We got funded over the weekend, and now we have the money. So more challenges come. I mean, you have relief because you have the money, but you have to spend that money. It's kind of like Brewster's Millions. You have to spend it properly, or you may have it not forgiven. So in it becomes more challenging. I own restaurants, so I don't know about regular retail. I know about what I do, and what we're finding a challenge is bringing people back to work. We also had to rethink what 8 weeks were. So let me start with that first. So 25% of that loan is good for your rents and your utilities. And so I was in a box thinking that 8 weeks is 2 months and how to handle that. And epiphany came to me, and I started to think outside the box. And I really think it's advantageous if you do that and you look at the 8 week period so that you can pay the most of your utilities and your rents or interest part of your loans the best possible. And then once you've dealt with your 25%, then you can deal with your 75%. We in the restaurant business are only open for carry out, and it is very little in labor to do that versus the dine-in. So utilizing the funds, as you may think, if you break it up over an 8 week period and you have so much money allocated for each week, doesn't really work that way, knowing that we're gonna be able to move forward and need more labor when and hopefully we're released by the government for dine-in. Most of my establishments are dine-in. The takeout thing is a little foreign to us. So my strategy is to roll it out and start bringing employees back week by week and growing the staff again. So that's been a little bit of a challenge for us. The other challenge that we're having is the fight with our competitor. Our competitor right now is the unemployment. And up till yesterday, I didn't have a clear understanding of that. Unemployment's offering their normal weekly benefit, and they've added $600 to it. So if someone was getting their $240, which is the maximum benefit on unemployment, and they add $600 to it, that $840 is much more than what your entry-level restaurant employee makes normally. So it seems to be a battle to get people to come back to work. That's what we're finding. As I got more clarification yesterday, uh, they can still stay on some unemployment and claim the amount of money that they take from the restaurant up against their UI claim. So with that, it's making it easier to try to find people to come back to work because they're obviously getting more money on unemployment and having to do nothing. We found that if an employee refuses to come back to work, then at that point we can also report that employee to unemployment, and their benefits are then taken from them at that point because they're refusing work. But we're focusing on rolling the money forward into the months which we reopen when we need most of the payroll money to cover expenses. Other than trying to find the employees to come back to work in a store that's not busy, the process has been good. It's been great, but it's challenging. It's challenging because it's not what we do for a living, right? We all run whatever particular business you're sitting there running, and all of a sudden to have to be a manager of monies that you have to use, where on a daily basis we're trying to save dollars, you have to use this up. So I suggest, it's a good old spreadsheet and figure out what you need and go week to week and find your growth from that point. And that'll find you more success. Don't think inside the box, think outside the box, how to best utilize your money. That's been our experience. Questions, thoughts?
Thanks, Jim. I think we'll move on to Oren, but look at the questions on your screen. There's a few that are coming in for Ryan, and we'll get to all of them at the end here after Oren speaks, but you might see some questions pop up there.
Thank you.
Now we'll turn it over to Oren, the CFO of Fain Signature Group.
Thank you. I want to thank Ryan and Jim for their informative messages. I just want to let everyone know that we here at Fain Signature Group have put this webinar on because we want everyone to succeed in the community. We want everyone to be ready to when you can open your doors to resume business. When that time comes that you are ready to run and then return to a profitable business environment. When the whole community is successful, we can all be successful. But today I'd like to share with you our success in applying for the Payroll Protection Loan. We received the application, as Ryan said, on the morning of April 3rd, that Friday morning. I had already filled out the application prior, the old form prior to that, so it was pretty easy to fill out the application. There were 6 different forms. They were all pretty straightforward and easy to complete. We returned them to Foothills by the early afternoon on that Friday. Doug Lindbergh at Foothills emailed me on Saturday morning and said I was missing one document. I sent it to him immediately, and the loan was submitted to the SBA. And by the following Tuesday, we knew that we were approved. We had documents to sign the following Monday morning, and we reviewed them, signed, and returned the documents. And funding took place literally within minutes of our returning the signed documents. So all this process was done in 6 business days. I've done many loans over my career. Never has the process been so streamlined and efficient. So my message today is I strongly recommend that every business owner out there put forth the effort to apply for the available relief. We've also applied for the Economic Injury Disaster Loan, or EIDL, with the SBA. And all I can do is assume that the SBA is so busy with the Payroll Protection Loan and the $10,000 grants that the EIDL loan applications are being delayed or held back. But I do encourage everyone to apply for this loan also. So the lesson I learned from this is to move fast, provide all the required and complete documentations, be patient, and be persistent. stay in constant contact with your lender. Poor Doug, he was so helpful through this process at Foothills Bank. I'm sure he got tired of me calling him and emailing him, but he never showed it. But really, the process was pretty quick and easy. And I think that's my message.
Thank you, Warren. Maybe we can go into a little bit of the Q&A. I think we have, there's definitely a few questions for Ryan out there. Jim, there's also, I think there might be some questions for you, but Ryan, maybe you can answer the question, once a business receives approval status from their bank, are the funds guaranteed, and how long could they expect before those funds to be funded?
So as soon as the loan is input into the SBA E-Tran system, then those funds, that's when it goes into the approved bucket, and at the SBA, it counts against the 349 billion, and it's basically set aside at that point for you. The goal is really to fund those within 5 days. I'll tell you, not really realistic in the real world, probably, for a lot of the banks that are now dealing with the kind of volume that we're dealing with relative to our normal activities. We are trying to put a hard cap at 10 days. So at most it'll take 10 days to get that loan. Striving for 5 up to 10 days would be the answer. And just for kind of some perspective on this, I mean, the number of notes that we're putting through here in a 2 to 3 week period are more than the number of notes that we would typically touch in a given year, and we're doing that all in 2 to 3 weeks. When this is all said and done for this 8-week period before these loans start getting forgiven and repaid, these will represent more than 10% of our bank's total loan balances will be in this program. So I just hope that puts into perspective a little bit of the volume that we're dealing with, at least our bank is. And I know Oren was mentioning Doug. I feel so bad for Doug. I mean, he's working I think until 10 o'clock every single night, just to try to stay on top of things. And he's probably put through, I would say, I'm just guessing, over 80 of those applications that he's dealt with in the last couple of weeks. So he's done an amazing job for sure.
Great, thank you. There was another question, which I think is great because it deals with companies similar to Fain Signature Group, where you don't have the high turnover or high volume of employees. So John asked a question. He's applied for the loan, been approved, and it's been funded. So they've had some natural attrition. In the last month, they had a resignation and a termination, and they're also expecting a retirement. And now it looks like they're going to implement some pay cuts across the board for this economic downturn. The question is, can this salary expense reduction that he's having, some naturally, some intentional, affect the amount of loan forgiveness in the end? And maybe you can add, how can he protect against any part of the loan not being forgiven?
So yeah, that's one of those answers that we are still waiting on some clarification on from the government. What we do know is that you have to spend 75% of your loan amount on salary expense, and that you have to have the same amount of employees at the end of this that you did coming into it. Those are kind of the two main tests that we're aware of at this point. What isn't real clear, that at least I haven't seen any great guidance on it yet, is if you miss that mark, what exactly happens? Is it a division, kind of a math problem where you get 90% forgiveness or 95% forgiveness, or is it stepped in a different way? We just don't know those answers yet. So I think the safe thing is to make sure, one way or another, that you have the same number of people on payroll at the end of this that you did coming into it. And February 15th is kind of the key day for all of that kind of stuff. And that you maintain your payroll at the same amount. So kind of the thing I saw was, the across the board pay cuts. That's really probably going to impact your ability to have this amount of money forgiven. Because the whole point of the program is to pay your employees at the level that you were paying them going into this. And if you do the math on it, 75% of 2.5 times your monthly salary over an 8-week span is basically carrying on at 100% of your salary throughout that time period. So
Thanks, Ryan. The next question out there from Adam applied under the SBA website, it looks like, and is asking a question about transferring that over to B of A.
So my understanding of that would be that if he applied through the SBA website, that would have been one of those EIDL loans, the disaster loans. The Paycheck Protection Program was always through the bank or the banking system. So there was no way to apply directly on the SBA website for this program. There is a way to roll those funds that you borrow in the EIDL into the Paycheck Protection Program. What we're finding, I think, like you mentioned, is people don't have those funds yet. So there's, by the time they get this paycheck protection loan, it's actually, before they would have gotten funds through the EIDL. So no way to move that over. They would have to go directly to their bank and apply. And I think that they're talking about 2 different loan programs there.
Here's another one, and I think this is common with all the confusion that came out right at the beginning. Sarah asked a question, applied through their bank. They have a line of credit for my PPP. I have found out today that the application has still not been submitted. And I'm guessing that they've applied through the bank, but the application wasn't submitted. Is there anything that she can do at this point? They have 5 employees.
So this kind of comes down to that, you got to have a conversation with that bank and see if you can get to a person who can answer a question about a realistic time frame to get through the process. If you talk to them and it sounds like you're still 5 days away, stand a good chance of missing the boat there. And you might want to try to scramble to another bank. I can tell you that right now, the applications that we're getting today, we are telling everyone that applies, we will do our best. But at this point, with how fast we think the remaining funds are going to go, we are, not able to promise anything for sure. When the money runs out, it'll run out on us too. One day it'll not accept any applications. So what you can do, if you're unable to find a bank that you think you'll be able to get funded that quickly or get approved quickly before the allocation runs out, is to get all of your ducks in a row for hopefully the next go round. If they come to an agreement on a next round of funding for this, be ready, be watching the news, be first in line when those application dates open up, and be there, front and center with that application package. Everything I've heard that it would be the exact same program, just increasing the allocation for it. So everything that you would have applied for an application this go round should apply the next time as well. I see there's a question here that is asking about what you could potentially do if you have employees who are unable to work in their traditional capacity. And I've heard of all kinds of sort of creative uses there. I mean, the idea is you're getting basically free money to pay these employees. So, if you're paying them, most people want to try to get something out of them as well. I've heard of, deep cleaning and maintenance, in the case of like hospitality, where there's just not, the traditional jobs that you would normally have there for a hotel, motel, because there's not the demand. Now's the time to do all that deep cleaning and maintenance that you've always been, wanting to get to, but never quite have the time. A lot of people, I've heard of people, putting extra effort into marketing campaigns right now, social media, all those kinds of things that can add value to your business when things resume, somewhat of a new, or get back to normal, that you can do now to kind of lay the groundwork for those. I know, in our bank, we always have projects that people always mean to get to, and the demands of the day are just too much. I think that probably every business has that. now might be a time to look at those and see if you can possibly use, what is free or very cheap labor with the government paying for it to get some of that stuff done.
Thanks, Ryan. I think, Jim, there was a question right before that that was directed at you. And as an employer and an owner of your business, have you come up with any creative ideas to keep employees or bring back employees when they're not doing their former traditional roles?
Right. So, yeah, that's challenging. Ryan, I hear exactly what you're saying because there's a lot of things that we'd like to do. So the hard part about that is understanding your cash flow. So some of these things actually take other dollars that might not be available. There's a couple things I want to talk about real quick so that people in my industry, and I don't know how many of you are out there, you have to take into consideration some other things that are happening at the exact same time when you're applying for that PPP loan. You're giving them 1 year of payroll stats, which are then divided by 12 months. In the industry in which I work in, payroll changed December 31st. So 10 months of those estimates are done at 12% less when minimum wage was less. So server would make $8 an hour, now they make $9. A minimum wage dishwasher or prep person used to make 11, now 12. So the money that you're working with in this actual year is different than the money that you submitted for your PPP loan. So be careful of that because your average monthly payroll is higher now than the money that you're actually being allotted through the PPP in Arizona. So with that, finding things for people to do is a great option. But I almost want to say you want to hoard your money in the beginning because if we get open for May, you want to be at full steam and you'll need a full month's of payroll. So when you take your PPP allotment and how they figured that was 2.5%, once you put that into an equation and take out the 25% for rent and such, you're down on your monthly budget for your normal payroll. So if you take some of it from week 1 and week 2 where we haven't been released to go back to work, and you have minimum staff working and roll that to the end of the 8 weeks, you'll have more money to use in a month where you're doing full service or you're what we call as back to normal as possible. So that's how we're finding ways to strategize in our money management because you have multiple things happen to you at the exact same time. It's not enough money because you're using last year's figures into this year's economy. And at the same time, there's no work to be done. So we are doing deep cleaning and some maintenance, but whatever the cash flow can pertain to, because we've all taken a hit this last month. So you only have so much money that can be allocated towards that. I understand that. So if you bring the people in a little at a time and retrain us to however you're working business now, at least you got the engine running and moving forward versus trying to start it up from May 1st on. That's what we've experienced.
Thank you, Jim. And another strategy that I heard out there, it's not us and it's not what you're doing in the restaurant industry, but it's another business, and the business owner was sharing with me that they're likely going to have to let really good people go during this slowdown. And their concern is, if I let them go, will I get them back? Because once the economy fires back up, there's going to be all kinds of employers hiring people. And so it may be hard to keep them. And also the concern you had, Jim, earlier about the $600 unemployment checks going out there and how to deal with that. They're not in your situation with servers, they're in a different situation. But a strategy that they're going to deploy if they get it, or at least they're considering it, is their people make a little bit more than minimum wage. And so if you're on the clock and working, they're paying the people their going rate, but they're also going to pay people minimum wage when they're not working and they're staying at home. And so what they're trying to do, their strategy is to keep their employment pool so that when they can bring them all back, they don't have to go out and find people. Hopefully their strategy is more of a retaining employees, even though they don't have work for them. So I just throw that out there as something somebody shared with me. I don't know if it works in every situation, but it was a unique idea of also helping your employees when you don't have work for them by giving them a payroll check, even though they might be at home. So we'll go on to the next question here. Jennifer asked, has a small family child care. They submitted their application for the emergency funds on the SBA as well as for the PPA. It sounds like the PPA process is going a lot smoother through Bank of America. They've already gotten a response. Which is better, the EIDL or the PPP? And maybe Ryan, you can describe the differences between the two funds because I think they're for completely different purposes.
Yeah, and so I mean, I'll kind of preface this by saying that because the EIDL is done directly through the SBA, it's not a program I'm as familiar with as the PPP. But my understanding is that is really a loan to be repaid, and I think it has some favorable terms and those sorts of things. And I think there is maybe a small chunk of that can be kind of a grant, sort of a component, but by and large, I think most of the EIDL is a loan that's intended to be repaid, whereas the PPP is for the specific purpose of really the bulk of it. Just think about as payroll, and then whatever's kind of left over you can use for loan interest or utilities, and it can be fully forgiven. So one is just more of a loan. Um, Except for maybe 10,000 of it on the front end, for the EIDL that can be kind of a grant piece, where the PPP is really more, you know, free money if you use it for the right purposes. So I would say there are more people lining up for the PPP than there are people lining up for the EIDL, but both definitely have their uses.
Ryan, there's another question out there about how does somebody know they qualify for the PPP? So are there certain qualifications out there?
Yeah, I mean, I would say that the best thing there is to get in touch with one of us or your bank and discuss your particular situation with them. We can share the guidance that we have on that. There is the interim final rule does describe the companies that are eligible for it. It's pretty broad. I mean, most businesses with payroll are eligible, and if you don't have payroll, if you're a sole proprietor or independent contractor, it's just you. You are also eligible, basically for your the net profit amount, of that. So there are some other specific requirements, like you can't include in your payroll calculation that portion of anybody's salary that is over 100,000 per year. So you have to adjust that. So there's some specific items on it. A lot of the paperwork that we would provide you for the application package has the specifics of that in there. And then we are asking all of our applicants to read that and attest that they've read that and that they understand the rules of the program. But one of the challenges that we've had is people seeking guidance and advice from us when we don't really know the full rules of the game yet, because it's been so slow coming out from the government. And so, we want people to attest that they've read all of the guidance that's out there, so that they really can make an educated decision on how to use the funds and whether they're eligible.
The next question, Ryan, is another small business, been in Prescott for 25 years. Looks like the question here is they cannot find a bank that is accepting loan applications. Where can we get these applications?
So if you want to contact us, we'd be happy to send you an application package. We have them just ready to go, ready to fire off. So we could do that for sure. And I don't know if there's a good way to share our contact information, but you can definitely get them from us. I think a lot of the banks have an online application for them. Some of the larger money center banks, I think, have an online application. So there are various, ways. I think it starts with an email search or a internet search of your bank's website, or a phone call to your bank to ask how they're processing those. Ours are all going through our loan officers. So if you get someone in the branch, they'll refer you to a loan officer, and a loan officer will reach back out to you with the application package.
Next one, interesting question here. Can a staffing firm be able to convert the payroll loan for contingent staff into the grant?
I'm not sure I understand the question, to tell you the truth. I'm not understanding it. Nish, if you want to ask it maybe in a different way, I'll take another stab at it.
All right, we'll see if she gets back. Give her a minute to type that up. Let's go on to the next one. Do you think a new application will have to be submitted on a second round of funds if approved by the government? Or I think the counter to that is, if I already have an application in and didn't get funded, will that one be valid?
I think it's going to depend on the bank that you're dealing with and what their processes are. We haven't actually gotten to that point yet where we've figured that out, but I imagine what we'll probably do is we'll probably hold on to those applications that we have in our system that didn't get into the SBA E-Trans system in time. And when the next round of funding, if the next round of funding comes around, we'll probably reach out to those borrowers first. We'll already have a complete application from them and start submitting those through the SBA E-Trans system.
Great. Here's another one for all those entrepreneurs out there. Small startup company, less than 2 years. The owner did not establish payroll for themselves, was actually about to do it. So are they eligible for the PPP if they weren't on their own payroll? And if so, how do they get the funds properly with regard to the payroll?
So it depends on how they file their taxes, really. If they're a Schedule C filer, and you don't necessarily have to pay yourself payroll, you would be eligible to draw up to the $100,000 annually, on a per month basis, of net income that company you know provided for them. So doesn't necessarily have to be wages through a payroll company, if you're a Schedule C, like a sole proprietorship. If you're a partnership or an LLC or an S corp, and you aren't paying yourself payroll, probably going to be limited in what you can do. We aren't able to provide financing in those instances based on net income of the company.
Great, Ryan. The next question is, Ryan, can the business getting the funding this round get funding if there is a second round? And then there's a priority question. If the businesses that don't get funding in the first round, will they be first in line for the second round? Do you have any knowledge or insight on that?
So I'm just kind of speculating here, but I imagine that this will be a one-time deal. If you got funding in the first round, you won't be able to get funding in the second round. It'll just be an additional allocation under the same terms of the current program. And then if you don't get funding in this first round, I've told you how I think our bank will handle that. We'll probably have you in a separate folder ready to go when the next round opens up. But officially from the SBA and the government, I don't think there will really be any sort of a priority system there in place. It'll be up to the banks.
That's a long question there, Ryan. I'm trying to abbreviate it. It's about having the paperwork, and where do they go once they get all the paperwork?
Yeah. So much of this, it just goes back to the bank or credit union that you're dealing with. And it's unfortunate. It does sound like that they haven't gotten really great advice or been able to move forward with their institution. My advice would be to find another institution that you believe will be more responsive. Um, I know many banks are limiting it solely to their own customers because the volume is so high. We actually kind of started down that path. We had a priority system laid out so that our own customers kind of got priority processing on it. But as this has gone on, we've been able to process applications for new customers to our bank as well. We are requiring anyone new to our bank to open an account with us and establish themselves as a client of our bank. But yeah, you're just gonna. I think the best advice I can give would be to try to find the most responsive bank you can find and see if they can get you pushed through.
I like this next question. If you applied for the PPP and you got funded, and after 6 months you found out you didn't need it, can you pay it all back without any penalty or fees?
So yeah, I think you'd have to pay your accrued interest, which is 1%. Um, and the question here is, I think is if you don't apply for forgiveness, so you just take out the loan and want to repay it, yeah, there's no prepayment penalty or anything like that. So you'd really just be on the hook for the interest accrued on that, which would be 1%, or if you're paying it back after 6 months, basically 0.5% of what the total amount of principal you borrowed was.
It looks like we just need a little more clarification on the employees. Can you clarify again what is meant by the same number of employees? Is it at the end of the 8 weeks or when the repayment is due?
It's at the end of the 8 weeks. You will need to have the same number of employees, is my understanding. And again, we will get more guidance on this as we go. But my understanding right now is that if you have the same number of employees at the end of that 8 week period, and you've spent 75% of the funds on payroll, then you would be eligible for the forgiveness piece of it. The risk is if you wait too long, you hire all of your employees back in that 8 weeks. In that 8th week, you're going to have to pay them a pretty high weekly wage in order to hit your 75% number. If I'm running the business, I would probably try to bring them back a little sooner, and have them do some work in the meantime. If I could put them to work somehow.
And I think that kind of answers the next question. If they've already closed their business and all their employees have already been applying for unemployment, would they have to rehire them in order for the loan to be classified as a possible grant?
Yes, yeah, and not. I mean, I think it's kind of important to note that from everything I've seen, it doesn't necessarily have to be the same employees. So you might have some employees that have left and gone in the unemployment rolls or found employment elsewhere. It just has to be the same number of employees. So kind of keep that in mind.
All right, Ryan, it looks like we have clarification from Nish on her question from previously. So she has two kinds of employees on payroll. One is permanent staff, and the other is contingent staff, which are billable to clients. So we know the permanent staff payroll expenses and will be converted to the loan, but there are not clear indications about the contingent staff payroll, which can or cannot be converted to a grant.
So that's going to depend on how that contingent staff is paid. So it sounds like it's possible they could be like a 1099 type of independent contractor, or worker. If that's the case and they're a 1099 employee, then they would potentially be eligible to apply on their own as an independent contractor to get the PPP for themselves personally. If they are maybe irregular staff, but are paid through the regular wages, then you would take the average monthly salary of them over the 12-month period, and that would be the basis for your loan and the forgiveness. But you know, you kind of run into a situation like that where, you know, kind of the opposite of what Jim was saying. You could have during these few months a situation where that employee wouldn't normally be working, and you find yourself in a situation where you might have to try to pay them, you know, just to get to that 75% number if they're irregular type employees.
All right, I think we've done a really good job, Ryan. Maybe one last question here to kind of wrap up from Foothills Bank perspective. Based on the bank's volume and demands for customer service standpoint, what is the best way to communicate to the banks, email, phone, or in person? And also, should the borrower set up a separate bank account for these loan funds when they come in?
So I will say that most banks these days, I believe, I know our bank for sure. I think most other banks are actually have their lobbies are closed down. So email and phone is going to be the best way to communicate with them, and either one probably works fine. Uh, I would just say, you know, be kind of patient with your loan officer or the person you're dealing with at the bank. Um, the volumes of emails and phone calls are just off the charts, and I know, I mean, I can only answer for our bank, but I know that we are doing absolutely everything we can to get back to everyone and process these as fast as possible. If it means staying late at night to return calls, we're doing that, return emails, that kind of stuff. So you know, if you don't get a call back right away, you know, that morning or whatever, I mean, give them a little bit of time to respond, because it's truly just that they're inundated. I mean, I've been in banking for 16 years, and this is by far the most I have ever worked. It is crazy busy. We've never seen anything like it. I've got career bankers I work with who've been in banking for 40 years, and this is something they've never seen before. So email, phone, and a little bit of patience is definitely appreciated. And then as far as setting up a separate bank account, it's not necessary as long as you can provide the documentation that you've been, you know, that you've used it, that your payroll records will suffice, or you know, the payments, canceled checks or whatever that you've made for interest or utilities. That would work. You can set up a separate account and use it that way. Some people might not do that just because their payroll is already set up with their payroll provider to come out of, you know, one account, that kind of stuff. So definitely an option, might make it easier to track just depending on your you know, particular circumstance. We are requiring, like I said earlier, any non-customers to open accounts with us, and then we are funding these proceeds into those accounts. Our hope is that they stick with us and they continue to use that account. But we understand that some of those may, you know, withdraw the money and you know, go put it in whatever normal operating account they have.
Great. Thank you, Ryan. And believe it or not, an hour has gone. And that was kind of our commitment today. We want to respect, Ryan, your time. We know you're really busy. So we wanted to start to wrap this up. I just want to, you know, Jim or Oren or Ryan, any one of the three of you have any just final thoughts you want to say? And other than that, we'll start to wrap this up.
I just want to say thank you for having us. We love being part of this community, and again, take great pride in the fact that we've been able to help so many people in the community, and we want to continue to do that right up until the point that they shut off the tap on us.
Jim, any final thoughts?
You know, no, thanks for the opportunity to share our story and what's going on. Good luck to everyone out there. Sure, it's trying times. Keep your head up, stay focused, and don't let it beat you up too bad.
Great, thank you. And, you know, from my perspective, on behalf of my brother Ron and myself and the entire FSG team, who's really been instrumental in this process for us and the Fain family, we just want to say thank you, Ryan, Jim, and Oren, for being on the call today and being a part of this and sharing what you guys know and your experiences. And really, we want to just send a big thank you out to the community that joined us today on the call and that joins us every week, because it really is, for us, it's about community. And when the community does well, we do well, and together we all do better. So thank you for being a part of this and helping each other through shared experiences. So thank you all. We really appreciate your time, and good luck. And we're all here to support each other. So be strong.